Welcome, my name is Isabella Brusati and I am the founder of Isabella Brusati Consulting. I help executives and senior managers in financial services getting digital transformation right. In this second video of the Fintech series, I'm going to talk about the challenges that traditional banks or incumbents are facing right now as we are basically filming this video. Fintech is not a potential threat. It's actually something that is happening and has been happening for a few years. I will be talking about the opportunities for, I call them traditional banks, in the next video, but today I'm going to discuss how the landscape has changed significantly and just literally in few years. Specifically, I'm going to focus on four different elements. The first one is new entrants, and most of all the fact that these new entrants are not banks, or not necessarily banks. I mean, up to a few years ago, banks basically were just competing with other banks. So banking license was something that was required in order to operate in the sector. So the way that it worked, I've already explained that in my first video, so I'm going to just go through it very quickly, is that the bank account as the center of the relationship with the customer, and basically then the various saving account, credit card, lending, mortgages, etc. So basically the bank was diversifying the various products and services that were all bundled together. Nowadays things are changing because first of all there have been changes in regulations and there are new entrants that are basically competing with banks, but they are not basically the traditional banks as we see them. So nowadays banks are basically competing with companies like PayPal, they are competing with TransferWise, or they are competing with massive giants in technology like, for example, Google, like Apple. They will have wallet payment systems, and also Facebook has applied for a licensing payments, and he's basically has got a massive numbers of potential customers, especially amongst millennials. So whilst up to a few years ago banks basically were more or less offering the same things, it was a typical bank account and they added a little bit of online banking. Yes, there was a kind of a company that was a little bit more sophisticated and maybe gave you the possibility to use an app, but it was the best basically you could expect. Nowadays you've got these massive big players like Apple, Google and Facebook that are entering the market, and they already have the trust of the customers, and they basically are focusing on one specific service. So for example, Google and Apple are focusing on payments. So this, for example, Apple Pay, which is a wallet payment, which is sort of similar to PayPal. There are other companies that just enter the market doing one thing, like TransferWise, that is focusing specifically on cross-border payments. So cross-border payments used to be very expensive because you had to pay up to 10% fee of the payment, and also there were the problems related to the delays in making the payments. There were problems related to changes of currency. Well, all these issues are being swiped away, and these small companies are growing very quickly because they are in a position to offer excellent customer service, which is something that traditional banks are not very famous for. So first element of the current situation is new entrants, and most of all what is called asymmetry of competitors. So competitors that are not necessarily the typical financial services players. The second element is the unbundling of banking services. We said before that all the services and products of typical banks are bundled together. But because these entrants are coming in and are focusing on one specific aspect, so they are focusing only on loans, crowdfunding, they are focusing only on payments, they are focusing only on one single element, they are basically splitting up this core that is typical of the banks. So they focus on one thing, they focus on how to do it very, very well, and basically they then would probably diversify in the future. There is a question mark on whether they can scale or not. Again, it's something that we will have to see in the future, and there's also a question mark with regards to trust. But some of these companies are growing very, very quickly and are doing particularly well. So the banks basically are running the risk of becoming utilities, especially because there is a third element that is coming into play, which is the regulations. In particular, the most important change that is going to happen in the next 2 years, so they will have to be adopted by the EU members by January 2018, is the Directive on Payment 2, which is basically opening up the landscape to more competition by giving other companies that are not necessarily basically companies that have got a banking license the possibility to access the data relating to a client that is retained by a bank. Of course, they need the consent of the client. What does it mean? Well, basically, as a bank, you've got all the data related to how much money the person is paying into, the spending habits, etc. And there will be other parties that will have the possibility to collect this data and to basically show the client exactly what kind of fees they are paying, making comparison whether bank A or bank B is better, whether, for example, they can offer a different service that is better in terms of customer care and so on. You see that basically the risk is for banks to become utilities, because they may become just like, the structure to provide the basic information, and then the relationship with the client is actually nurtured by third parties. So it's also the regulators that have decided, especially in the European Union, that the sector has to be more competitive, and it's time to open up to different players. So this directive is going to make a massive change, and we are just already seeing some changes, especially in the UK, even though there is Brexit going on, and so there is a little bit of, there is a little bit of an issue going on there. But still, banks have to basically start preparing for new competitors to come in, because basically not only it will be required to provide this information, they cannot say no, I don't want to give it to you for privacy reason or this kind of stuff. Of course, as I said, there are specific guidelines that they have to comply with, but also they would have to be more transparent. And then it goes down to this issue that was raised with the financial crisis of 2008, with an erosion of trust of banks that were seen or perceived by the public as the main basically body for causing the financial crisis on a global level. There is then a fourth element that has to be taken into consideration, and this is talent. When I graduated back in the days, getting a job in a bank was seen as, hitting the jackpot, because, when you go into the bank, you work there for life, you get paid well, there is a possibility to be promoted, you get your bonuses, you get your perks and all the rest of it. Now, job for life doesn't exist anymore, and also going to work in a bank is not basically perceived as hitting the jackpot anymore. We said that there are new entrants in the system, and are these startups in some cases that are very agile, very innovative, and they want basically the best talent in engineering, the best talent in computer sciences, maths, statistics, the best talent in design, the best talent in marketing and communication, because it's not only coding, it's also the interface and the ability of dealing with the client to the best of levels that you can possibly imagine. So nowadays, this talent, I'm not talking only about millennials, I'm talking also about people that are very experienced. find themselves in a position of choosing: do I go to work in a bank, which is usually perceived as old, a little bit of a dancer, there is this erosion in trust, and usually when you talk about banks it's not very jazzy, when they are perceived as a little bit of old style, whilst you got the possibility on the other side to go to work or for a startup that gives you the possibility to innovate, that gives you the possibility to be part of the action, or other companies that have the little name of Apple, Google, Facebook, so we always go back to the same names, that of course are attracting the best talent, also because they can easily compete in terms of perks, in terms of benefits, but most of all they compete in terms of motivation, how to motivate people, how to be part of a company that has got a message that is not just churning money and making money or by charging fees to the customers. So we can see that also nowadays banks are in this position whereby not only they are facing new competitors, but they are actually struggling to hire people with the right skill set that is going to give them the chance to counteract what the competitors basically are doing. Because in most cases, I talked with I got some cousins and nieces that are going to uni now, and I'm like, well, if you would have to make a choice and you get an offer by Google or by Facebook or by bank B, A, B and C, what would you like to do? And they will go, oh well, of course I will go for Facebook and Google, because they are they are the future, whilst the bank are perceived to be the past. So there is also a big change in culture that has to happen, and sometimes senior executives are dragging their feet, but the market is changing. So even if they are dragging their feet, they are now in a position whereby these changes have to be put in place. You cannot wait any longer, because otherwise the risk is I'm not saying to go out of business. It's not something that is going to happen anytime soon, but basically to be perceived just a utility, and where you go sometime to deposit your money and to take your money out, but then the jazzy part and the most interesting things are done by someone else and elsewhere. This is the landscape as it stands now. Is not all bleak, by the way, and in fact in the next video, so video number 3, that will be posted Tuesday next week, I will be talking about the opportunities for banks nowadays, because there is a possibility to act in a strategic way. It's not too late. It's still a little bit probably falling behind, but at the same time there is still the possibility to be part of the action, even though this requires a massive change in culture, because most of the banks are still working based on a business model that the financial crisis already showed it's basically crumbling, and now they are getting attached to something that basically is literally disintegrating. So thank you so much for watching, and I'll see you next Tuesday. Thank you so much.